Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is the 11th of March 2021 and the time now is 6:16 a.m. Well, today our topic is, would you invest more in stocks than usual during a market crash? So before we get started, please click the like button and subscribe to our YouTube channel. Alright, so here we go. Yep. Okay, for this, Eric, maybe for the topic today, I will try to come up with some calculations, and I'm not sure whether I use the correct way to calculate. And then, yeah, the reason why I came up with this topic is that I think whether it is more profitable if we hold some money and then delay the timing of invest.
Mm.
Yeah. So okay, let's say if a person can afford to invest in stock for 400 ringgits per month, and then yeah, would you mind if I go ahead with my calculation?
And
Oh, okay. Yeah, and then uh uh we can also look at uh the cycle of the crisis. And let's say if the person think crisis will more likely to come after every 10 years. So the last crisis is 2007 and 2008. And then so 10 years after is 2018. Yep, so can I assume that this person holds some money of investment? Let's say he hold 200 per month. It means that he reduced the amount of money to invest, and he only invest 200 ringgits per month after 2018. So I should say starting from 2018. Yep. So okay, 2018, and then okay, yeah, and the crisis, the most recent crisis, let us say the crisis is the pandemic. And then I will use of the stock of Google in my calculation. Yep, and then um yeah, and then from 2018, I used the figure from eToro apps, and then the price in 2018 March is 41.26, and then uh, I'm now calculating it is something like the opportunity cost, because he holds some money uh, in his investment. And then so the opportunity cost I calculate starting from March 2018 with the price of 41.26 until February of 2021, which is before the pandemic really affect the economy. So the price at February 2020 is 79.89. Okay, and then after calculation for the price difference in 2020 and 2018, uh, um, the percentage is yeah, it seems like some error in my calculation. Okay, wait a minute, because I used the wrong figure. 79.98 minus. Okay. divided by okay, if I want to get the returns and then is 93%. Yeah, is that really high? It is 93% of increasement. Okay, and then divided by 24, 2 years. Okay, about 8%. Oh, okay. Yeah, so this person lost an opportunity. Opportunity cost value at 46% per year for this, and then 46%, and I tried to calculate if this person 48%, wait a minute, 48%, and then 2 years 46% year. Yeah, let me use the interest calculator. 2 year 46%, and then I get 5,900. Okay, yeah, so it's almost done. Okay, yeah, so in my calculation, this person will lost an opportunity cost of 1,100. This is because he hold the money of 200 for 2 years before the pandemic. So, and then
Can you can you explain how to calculate opportunity cost?
oh, okay. I use the price at March, the price in 2018 March, which is 41.26. The price of the stock Google stock.
14?
The price of
14,
Google stock is 41.26.
41. Google,
Yeah.
2018?
2018 March. This is I get from eToro apps.
Oh,
So it may
okay.
not be the same as the price you get on Google.
Mm, yeah, I think the eToro didn't uh uh I'm not sure whether the eToro chart is correct
Okay.
or not.
Wait a minute. The price. Yeah, I think it is not Google. Because Google is more than 1,000, right? So what is this? Okay. Let me check back where I use this figure. Okay. Okay. 41.26. What is that? 41.26 March. 41.26. Oh, yeah. I think I actually use Apple. It's not Google. Yeah, but the other part I actually calculate for Google. Yep. So yeah. How about we continue using the Apple stock?
Okay.
Yeah. Apple is 41. Yeah, right. It's Apple, and then 79 February. Yep. Okay. Yeah, and then this person actually okay, I give you the figure first. March 18, 41.26. 2018. This is for the year 2018. And then the price at February 2020 is 79.98. So I tried to calculate the difference in price and found that the stock price increased 93% in these 2 years. And then I divided this 93% by 2, and then I can get the opportunity cost is 46% per year. Is it okay?
But this 43.6% is average returns, so it's not the annualized returns. Yeah. But never mind.
Yeah, because the percent is higher, so we can get the figure which is it won't underestimate, right? The loss.
Yeah.
Because the annualized will be lower. So I assume the loss will be higher. So I use the weighted average. I think is still okay, right? Yeah. So the opportunity loss is 1,100 ringgit. If we calculate 200 per month for 2 years, and then we have 4,800. And then this figure at 46%, I get 5,009. Yeah. So yeah.
But just now you say you use February 2020 price.
Yeah.
And this is around 75, right?
75. Yeah, but there is a fluctuation here. Let me see.
If you want to pick the lowest point in March, I think it is about 57.
Okay, let me see.
Actually, if you really want to see the chart, you better use TradingView. Yeah, because eToro the price, the close price on eToro is not really accurate. It's not really accurate.
Oh, I see.
So I normally use TradingView.
Okay. Yeah. Yeah, but yeah, actually in eToro the figure is correct, 79.89. Yeah, but yeah, but since now I have been using all the figure from eToro, so it should be okay, right?
About yeah. So my question is, why don't you use the lowest point
Oh, the lowest
in the
point.
market crash in March 2020?
March 2020, lowest price.
It's about 57, right?
Okay, if let's say the in March, the lowest here is 61. Let's see. No. There is a one more even lower. Yeah, but I couldn't get it accurately. Yeah, it's 57. Yeah.
Yeah. So my question is just why you didn't use this lower price in your calculation?
Yeah,
You
because
use a higher.
I thought when the crisis come, and then yeah, this person may react, right? Yeah. So but actually I should use the lowest point and to make it like a fully 2 year, because I start from March. Yeah. So let's change the figure, and I believe that if I change the figure, and the opportunity cost will be lower.
Yeah, this is about 25%, because
Yeah.
57 minus 41.
Okay, I use 57.
57 minus 41 is about 16. 16 divided by 41, so it's about is less than 50%, but it's more than 25%. 16 divided by 41, so it's about 30 plus.
Yeah,
It's about 30 plus.
38.8.
Mm.
38, and then 38.8 divided by 2. Divided by 2. So 1 year is 19.4%, and then go back to the calculator. Interest rate 19.4, 2 years, and then monthly 200. Yeah, for here is 5,265. So the loss, okay, the opportunity loss, the opportunity cost value is 465. Yeah, 465 ringgit in total for these 2 years. And then so how about now we calculate if we use this 4,008 ringgit to invest in March, and let us assume that when this person realized that the price of the Apple stock dropped more than 10%, and he started to invest. Yeah, and then yeah, because I have to recalculate, I wrongly use Google in my calculation, so I have to do it all again. And then the lowest price here is let's see, before it started to drop. Okay.
But if you say,
Mm,
but if you say if Apple stock drop 10%, you will
yeah.
try, they'll try to invest more, right?
He only started to invest. I assume that he invests 5,000 at one time.
Okay, so
Yeah.
okay,
And
if
then
you look
the
at
price is around 72.
okay, if you look at 2018 March price, just now you talk about is about 41,
Yeah.
right?
Yeah, 41.26.
Then if you look about the 2018 October to to around 2018 December, is actually
Oh, a drop more than
this
10%, right?
yeah there's a big crash, and it even drop uh it even turns your paper gain to paper loss. Right, because
Yep.
because your entry price is 41, so at the lowest point it dropped to about 37.
Yep.
Yeah, so if you apply a strategy, if the Apple stock drop from the uh top price, yeah, the highest price, the all-time high, more than 10%, you invest more.
Yeah.
So the all-time high in 2018 is on October 1st. I think it's about October 1st. So it's about 57. So
56.
57,
Oh,
if you minus 10%, yeah. So it's about 51 to 52. Yeah. So if we use 51, so if you use 51 to buy, you will buy at November. I think yeah, it's November 5th or yeah, around there. Yeah.
yeah, November.
Yeah. So after you buy, the stock price keep dropping. Keep dropping. Then then how will you react to that? The price drop 10% more and 10% more and 10% more. You see, yeah. For example, I definitely can say after the price drop from the all-time high, 10%, you invest more, then how much you will invest? 10% of your money, 20% of your money, or 30% of money?
Yeah, but for the strategy today, it is something like he deliberately to hold some money in his daily in his monthly investment. So they will have like a total saving like a few thousand.
Yeah, never mind. You don't need to look at how much they earn. How much they earn. You just need to look at the entry price. For example, the entry price is 41, and then if they delay 2 years, then the second entry price is more than 41. So that means they will have an opportunity cost, right? So it's very simple. You don't really need to calculate so accurate. You just know this is a better this is a better strategy, or this is a worse strategy.
Oh, yeah, you
get
mean
what I mean?
Yep. Because when I do the calculation, I also found that even though we say the price drop, but comparing to just for this big cap stock, for just 1 or 2 years ago, and the price is even lower than that. Yeah.
So and also because we cannot predict we cannot predict a market crash. Yeah, we really can't predict a market crash. We cannot predict the lowest point. We cannot know the lower price. What's the lower price in this market crash? So after we buy in, it may drop further. Yeah, of course. It also has a chance to start recover and rise back, and it also have another chance to stay at the price. Maybe for a few weeks or for a few months before crash or before rise. We don't know. Yeah. And just now you say, because we already experienced the market crash in March 2020 and it already recovered. So we say, it is a market crash. If let's say now the SP 500 is still lower than 2800. Okay, so so the index is around is close to the March 2020 index. So we won't say the market crash. We won't say the market already recovered. We may say, it may have a further crash. Right. This is because we already recovered and hit the all-time high. So we say, we already recovered from this market crash. Yeah. So this is something like this is a strategy you can do after the event. Then is no use.
But if but I think we can still hold, right? It still will recover one day.
Yeah. Yeah, it will recover in one day. So your strategy shouldn't buy at the lowest point. Yeah. Just now I throw a trap to you. And you're happy to accept it. Is it?
What do you mean? I didn't get you. Because for here, in this strategy, in my topic today, this person didn't buy at the lowest. It start buying after, let's say the price dropped more than 10%.
Oh yeah. Then then why we need to spend about 10 minutes to calculate the price difference between March 2018 and March 2020. I still don't get it. If you
Yeah,
say
because
if you say after the market dropped 10%,
yeah,
and March 2020 is not the first time Apple stock dropped more than 10% since 2018.
yeah, you can also say so.
So it's also a backward it's also a backward strategy. Not backward strategy, just use the use the future data. Use the future data. Your strategy to consider the future data. Yeah. If you want to say, when Apple stock drop more than 10%, then I will buy in. Yeah, it could be one of the strategy. Yeah, I believe many people have done this. But how much you will allocate, right?
You mean to different
10%?
stock?
No. I mean, your strategy. For example, your entry price is 41. So just say, you only allocate 50% of your initial investment fund, right?
Yeah.
So left 50%, and also you will earn income, and 50% of the fund you will do dollar cost averaging, is it? And another 50% is you hold as saving, because
wait
how to
for
say,
the 10% drop.
wait for the 10% drop. So after 10% drop, how much money you will invest? I mean, not how much money. I mean, how much percentage?
From the
10%
saving,
of
right?
10% of your total saving, or 30%, or 50% of all.
Yeah, that is another strategy. But I think
Because it could drop another 10%.
yeah, right. Yeah, we never know when is the lowest. Yep.
Yeah.
Yeah, but yeah, if use this strategy, I think yeah, it follow the percentage and not the lowest. So it is something like not be greedy. So let's say if it started to drop 10%, and then maybe to allocate 50% of the savings, and then yeah, if and wait for some times to see the percentage. If keep dropping, maybe drop another 50% at all.
Yeah. Many people apply this strategy.
Oh.
Yeah.
Yep. So and it seems like this is not very difficult to do, but do you think it is worth it?
Okay, to me, I have never used this kind of strategy to earn money. Yeah, to I mean, to earn a significant amount. Yeah.
Yeah.
The most significant the most significant amount I earn from is actually applying the dollar cost averaging. Yeah, and it's more simple than that. When you get the salary, yeah, yeah. At the moment that you realize your salary have been banked into your bank account, you just use that money to buy to buy the stock you want to buy. Yeah.
Yeah.
And for my case, I'm investing in cryptocurrency. So at the moment that I realize my salary already banked in, okay,
Yeah.
then I'll use that money to buy cryptocurrency. And
Yeah.
I try to avoid all the emotion.
Oh, and even
Because
for this drop more than 20% from the highest 57K to around the lowest is 44 or even lower,
yeah,
right?
yeah, yeah,
These few months.
yeah.
Yep. So did you invest more when it drops below 45K?
No,
Oh,
no.
wow.
Mm. And my total investment fund is shrink. Is shrink like more. I think it's about it's more than 25%. A few thousand Sing dollar. Mm. Yeah. Um. But if you ask me why I don't want to buy more, yeah, actually
Yeah.
I have the plan. I have the plan. If the price drop 50%, yeah, drop 50%, and I will spend like a few thousand. Yeah, I'll invest more few thousand.
Oh, so how did you get this 50%? What is the stock price you are referring at?
Uh, I miss from the highest price.
Oh, 57K, right?
Yeah,
So 50% is like minus 20 minus 29.
about 30K.
Yeah,
Yeah.
yeah. Yeah, it's around 30K.
Mm.
Yep.
But if you look at Bitcoin price, yeah, 30K is actually still quite high. 30K is 30K is the price in uh in January. Yeah, it's about January 15. No, sorry, yeah, it's about January. Yeah, so Bitcoin price already rise more than 100 more than few 100%
Yeah.
since 2021. So even though it dropped 50%, the price is still quite high.
Yeah.
And especially for this high volatile investment target, yeah. This is so volatile. And if you wait 10% and invest, you wait 10% to invest, uh, you'll spend out all your bullet, all your
Oh, yeah.
money very soon. Mm.
Yep.
And after that, when you face a real correction, 50% correction, and you regret.
Okay, so now, okay, so now is another question. Will you try to reserve some bullet to wait for the really, really big correction? You won't, right?
I will.
Oh,
I will. Okay.
mm,
But first, okay. At the first, I will determine how much money I can lose.
okay. Mm,
Yeah. And how much money I need to earn back. So how much time I need to earn back that the money that I can afford to lose. Okay, for example, like 1 year or 2 years.
Yeah.
For example, now I invest 1,000 per month. Yeah. So 1,000 per month. 1 year is 12.
12,000.
Yeah, it's 12K. Yeah, but if you look at the 12K, how much time I need to earn back this 12K? It's actually few months only.
Yeah.
Yeah. Maybe I just need to change another job. And try to work hard, and every month can earn additional few hundred. So yeah, because we are still young. So we can recover the losses from our active income uh in a very, very short time. Yeah. So after I know how much money I can afford to lose, I will invest all the money. Of course, normally I will use the dollar cost average. Yeah, this is another topic. Yeah, why I want to use this strategy.
Yeah.
And then after I apply this strategy, of course I still will have some saving. Yeah, maybe a few hundred. Okay, but few hundred, the accumulation of few hundred every month, will become a big amount, like a few thousand.
Yeah.
Yeah. So actually that is my saving. I didn't plan to do the investment. And but if the market crash like really is a deep crash, okay, like 50%, and I think this is a good chance, then I will use my saving to invest in. So I will left no cash, on my
All
hand.
in.
Not necessarily all in, because okay, you have two choice. You invest half of your saving. Yeah, this percentage is subjective. You can invest half of your total saving. You also can invest all of your total saving. Up to you.
Yeah.
But normally, I will keep like 2 to 3 months living cost. Yeah, and the remaining saving I will invest in. Yeah,
Yeah.
and then I will also get my I will also after I receive my my salary, so my saving will also grow. Will also start growing. Yeah, and I may use the saving. Yeah, I may use the saving to invest more, or may not.
Yeah.
Yeah. Uh, but uh, but I, but I have never. Yeah. I have never applied this strategy yet. Yeah, because there's no 50% correction.
Yeah.
And if you think, if you want to wait a 50% correction, then why not you just invest all the money in the past. Yeah. And because
Yep.
Bitcoin price hold 10K for a few months, why not you didn't invest at that period? Then until now it seems like rise a lot, and you wait it drop like 10% or 20% or 50%, and you start to buy. Actually, you are buying at a high price. You just
Yep.
increase average cost.
The entry price is higher.
Yeah. The first entry price, my first entry price is about 9,000 only. Yeah.
Wow.
So even though now it dropped 50%, this is still much higher than much higher from my first entry price.
Yeah, threefold.
Mm, yeah.
Yeah.
And also in the past, I don't have this experience. Yeah, I don't really have this experience when the market crash, then I buy in. Then after some months, after a few months or after a few years, I realize I earn a lot of money from that purchase. I don't have the experience.
Yeah.
And also I don't think I have the ability to really apply this strategy.
Yep.
Yeah, because once you're done, it will affect your emotion and it will affect your mental. For example, now you put in all your saving. Yeah, now you put in all your saving. So you should worry, right?
Yeah.
And also if you say if you apply the strategy you used just now, you decided to invest 500, but this 500 is the money you are about to lose, but why you still want to split into half? Right? Yeah. If the money is the money that you afford to lose, why you still want to split to half? And actually you are not doing investment, you are gambling. Yeah. You just do the gambling. Just you want to guess a lower entry price.
Yeah.
Yeah. But for for some stock like Tesla and for the cryptocurrency, you will never have the chance. You will never have the chance to buy at the last cycle higher price. For example, the last cycle is 2017. Yeah.
Okay.
The last cycle highest price is less than 20K. It's less than 20K. So it's about like 19K. Yeah. Look at these few months. Yeah, look at these few months. Yeah. When the bull run start to when the bull run start, yeah, this is so strong, and it will never have the chance. It will never have the chance to reach that high prior cycle high highest price. Yeah, and also you can look at the 2013. The highest price is about 1,000.
Okay. Yeah. Actually, Eric, I didn't get what you say. It is too difficult for me. Are you referring to Tesla
Also I'm referring the Bitcoin.
or Bitcoins?
Yeah. And actually Tesla is also the same. Yeah. You also can look at the Tesla chart.
Okay. And then what do you mean the last cycle? What was that?
Yeah, this is just looking as the because you have a rise, you also have a drop, right?
Yeah.
And if you pick the highest price at a period, in a particular period.
Okay.
So you may judge this is the highest. You may assume this is the end of the bull run. Yeah, it's the end of the bull run. Yeah. So you use that as the highest point of the prior cycle.
Okay. Yeah, and then you means that maybe after a few months or year it will reach another peak, right?
Yeah.
Oh, I see.
Yeah, and I mean for this kind of growth stock, okay, and it's not like the value stock 成长股价值股, yeah, the growth stock. Yeah, high growth rate stock. And yeah, the price wouldn't fall below the last prior cycle's higher price. It's very hard. Yeah, it's very difficult to drop more than that.
Oh, yeah, I saw some people, they say, in Chinese we call 支撑点, the supporting point. Is it something like this?
Yeah, it's something like this.
Oh, I see. Okay. Yeah.
Yeah, for example, you look at the Tesla and you use a monthly chart. Yeah, you use the monthly chart, you realize, yeah, there's no significant drop. Yeah, if you use monthly chart to see. Right.
Yeah.
Yeah. So the first thing you need to know why you want to apply this strategy. And what's your time frame? What's your investment time frame? If your investment time frame is 10 years, then
no point of doing it.
yeah, I miss the key point. Sorry, the key is actually how much time you are in this market. And there's one code. Yeah, there's one code in investment is time in the market is better than timing the market. Yeah. So you stay. So you stay in this market.
Yeah.
I mean, you need to stay in this market for very long time. Yeah, and it will be better than timing the market and choose the lowest point to entry, and choose the higher point to exit. Yeah.
Yeah. Yeah.
Okay, and just now go back to your strategy. Okay, if you say, yeah, I'm afford to lose 500. Sorry, just now you're using 400. Okay. You're afford to lose 400 per month. Okay. Yeah. And let's say you split into half, 200 and 200. Okay.
Yeah.
And then yeah, you just use the half. You just use the half of the money to invest. And then the remaining half, you are not doing investment. So go back to a few days conversation. I asked you a question. Yeah. What are in your portfolio? Right. So and then you realize your stock portfolio. Sorry, I miss your stock versus the cash ratio is even lower. You get what I mean? Yeah. Yeah. So this is also another example of timing the market is better than timing the market. Yeah. Ask the question to yourself. Yeah. What are the portfolio? What are in your portfolio? 50% of stock, or 10% of stock. Sorry, I miss I shouldn't use this. Yeah. Let me rephrase. Yeah. 90% of cash, or 80% of cash, or 50% of cash, or 30% of cash.
Yeah.
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 Okay. So, do you have anything you want to ask or add in?
Yeah, just make a conclusion. I found that yeah, really like you said, the time frame of your investment. Yeah, and then instead of waiting, and yeah, it's really better to to invest what you can afford. Yeah, because uh even though there is a drop, let's say 10% or 20%, the lowest will still be higher than a few years ago. So
Yeah.
in a longer time frame, maybe it will have some different, but it seems like not really useful to do that, and probably you will earn less than without this strategy.
Mm. Yeah. And you will ruin your emotion state. And
Mm,
it is more important. Yeah.
yeah, it's the cost, mental cost.
Mm.
Yep.
Yeah. Okay, so anything else?
No.
Okay. So that's
Mm.
all for our today conversations. How do you feel? Did you enjoy the conversations? Please tell us what you think of our conversation. And we are not native speakers. If you found any vocab or grammar mistake that we make, please also comment to let us know because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.